Great, great.
So what multi-time frame for me, essentially what it does is it sets the direction. Um, if you need a framework, follow what I'm going to show you now if for uh setting direction. I like to think of direction from a week, like I said earlier, I like to design my direction from a weekly swing trend or based off of how daily closes. So let me simplify that wording. Pretty much I'm designing my trades around weekly direction and how weekly is closing in relationship with other weekly decision levels. Also considering the relationship of them with how monthly is how it's reacting to monthly. So let's show you that in some theoretical imagery. This is monthly, weekly, daily. Like I told you, monthly is powerful, but um monthly it takes forever to complete. Monthly is on top, but it's old, it's slow, it's a grandfather. Um, Weekly gives us more stable information. So let's just consider this as resistance. Um, Pretty much what you want to do is actually, I'm going to take out monthly for now and just look at this. Is you want to see price come to these levels. So this is scenario one, this is scenario two. One second, you guys. I have a phone call. Just give me one moment. Just give me the 30 seconds, guys. I'll be right back.
Okay.
All right, so there's two scenarios. This is scenario one. Scenario one is going to be considered your rejection, and scenario two is going to be your breakout. So when you have a rejection, well, actually, let's consider the breakout first. Breakout is easier to explain. So actually, we'll make
Robbie, uh,
yo,
just one quick question.
yeah,
You are talking about H4, right?
yeah.
Or weekly? I
This is
mean,
H.
we
This is
got
weekly.
weekly level, and The
Hmm.
rejection of weekly candle or H4, just to clear this.
Okay, so this is weekly.
Okay,
Mm-hmm.
not H4.
Uh,
Oh,
okay, not H4. And I will bring in H4 into the picture in just a moment. Um, but setting the weekly direction is if you have a weekly level here, you've done your due diligence and determined that this is a weekly level that's been confirmed and it has this weekly level took out another decision level, making it a valid resistance. And you see that it broke above. Let's consider the breakout first, and then I'll explain the rejection. There are two steps with the rejection. Uh, okay, so if there's a breakout, it's pretty simple. You identify the source break. So uh, you identify the breakout level, which is this, and you identify something something here that can either potentially come back into here or here. One of those two. With the rejection is okay, fine. Price is coming up, coming up, coming up, coming up, goes up, and it rejects this level. Great. For the following week, knowing that this level is knowing that this level is a valid resistance level, if you have a rejection of the end of the week today, next week you want to see signs of that happening, and you would use OHLC theory. And sometimes what can happen is this right here. You have a breakout and you have a daily breakout of a weekly level, but daily rejection. You would you would still apply this as a rejection. So let me say that again. Sometimes what will happen is daily will break out a weekly level, but it rejects the daily refined resistance level. That would still indicate a rejection of resistance because price just wanted to visit the daily level. Let's see some examples of that real quick. Right. It was right here. Not this one. Let me see if it's this one. Yeah, it's this one. My bad. Okay. Yeah, it's this one.
Yeah, Rob, I have a quick question on this.
Yeah.
Rob, my question is actually in weekly and daily, between we have a lot of levels, right? Between weekly and daily. I mean, in weekly above we have maybe 2 to 3 daily levels also will be there. So how to filter those levels?
Hmm. Yeah, so generally, you want to look above the weekly. So if this is a resistance on the weekly, you want to find the refinement above the weekly level. For this scenario, yeah, we can see evidence of that refined. So you see how this level was rejected many times. It might be a little bit weird, confusing to you, a little strange that these levels are okay to use because you're used to understanding SNR as trading from fresh levels. So understanding that is a little bit confusing. That's point one. Point two is sometimes what will also happen is like you said, there's multiple daily levels that inside of the weekly there's multiple daily levels. So let's just say, for example, it's below the weekly. That also even happens too. That also even happens too. And when that happens, what you'll see is like, okay, let me see if this is okay. No. Let me try to replicate that understanding in this little bit of price action here. I'll see. There's that from daily to H4. Daily H4. Still the same concept. But yeah, what I'm trying to say is that sometimes the refinement, sometimes price doesn't need to go above the, like, usually in general, most of the time, the refinement is above the higher time frame level, right? We can all agree to that. That's just inside of the wick. It's that's where your refinement is. But sometimes it's not there. It's actually a little bit below. I did take a trade this week that was uh that was like that. I think it was yesterday actually. Yeah, it was Asian session yesterday. So Asian session yesterday, I found was it H1 level? Ah, yes, this is it. Is this? Yeah, oops. No, not green, blue. So I found this level and I took this trade. But then I was also able to identify on H4. I was being ignorant. I found this level. I did get the sell too, but Asian session I wanted to see, I wanted to trade it. H4 gave me that breakout level, right? Breakout level, decision level. So it's a retest of it. H1 was also there. So the H1 refinement was right there. And I got that, but at the same time, the trade for Asian session came from this level. It's a risky one, but you do it happens, and it was just basically observing time and OHLC, and what was happening at the time is that Tuesday ended. Tuesday, this is Tuesday. Tuesday. Time this is like early, late at night, I believe. And I got this sell, and then the market opens up at 2 o'clock in the morning, went up, and then sold off. But whoever asked that question, so this is weekly. Generally, I like to find my refinements in the wick, somewhere in here. If this is a weekly candle. I like to find that the refinement inside of here. But sometimes it does this, and it's really not high probability. You will get a reaction from it just to come back up to your source point, just like what happened here, right? It came back down. What actually happened was it came down, it broke out from this decision level, and then what it did was it came back up to retest the real source level to continue going down. So if you miss this trade, then you just look for, once you get your direction right, you just look for the next decision level that was created after the breakout. So we can observe that this is a decision level that took out this one. It's a level that's been rejected many times. It adds significance to it because it has multiple rejections. And quite coincidentally, it lines up with your QML level, but it's reacting to the decision level. So that's what gave us the sell. Whenever I'm back testing and I do this, I always try to look for trend lines. And your trend line for this one could have been let's see. There was one, and it was pretty damn good. Yeah, there it is. So it's just a trend line type 1, type 1, type 2, and then very sharp type right here. So when you see price come in there, again, kind of sounds repetitive stuff, but I guess the more you get it into your subconscious, then these are the things that you're going to look for. It's going to be a full-bodied candle. So if you don't feel comfortable just taking it right when it touches your trend line and your key level, what you can do is, if your direction is right, indeed you're bearish, then just wait until you see it falling a little bit and then enter, and then put your stop loss above your key level, right? To manage the trade, or to manage your trade, and there's going to be a different segment on risk management, but to give you guys some extra stuff now is that to manage the trade, most of the time we're taking our entries from some type of key level, right? You want to see that key level being validated. How? You want to see the level being broken that took price up to it. So in this example, we can see multiple key levels. It's actually this one right here, right? This type 1, it's a doji candle, but it's still a type 1. It took it into your level and then rejected it and then broke. So it gives you signs of continuation. It means that any rally up is just a pullback. And when you see this happen, when you try to apply the system and you see these push, when you see these up, you won't get intimidated by it. You'll just consider it as another way to enter the trade. So you got in the position here, you have another opportunity to enter here, and then you just ride the dragon. You ride the dragon. As simply as that. You can see, let's see how you could get involved in this trade right here. Okay, so price found supports. Okay. Did this. Let's go to M30. M30. Okay, great. So we have a decision level. I took out M30 decision level. And this is your, so SB. This is your S. And then what you do is when price comes up to it, come to them, you want to see them get rejected. And you can see that the SB gets rejected. So at that moment in time, you give yourself some time to wait. You get the rejection, you wait. What we already know is we're bearish, right? So if you're bearish, the candle needs to open up, go up first, reject our level, and then drop. If you took this one, it's the same thing, right? It's the same idea, is that you're already bearish, and then when you look for your confluence, your final confluence, which is your trend line, you see if there is a nice one. Let me give you a nice one here. Right there. This is trend line, tap 1, tap 2, and then tap 3. So when price is coming up into the level, full body, as it's rejecting, that's when you see, like, my entries, I'll start lining them up right here like this, in confidence that because of my overall direction is already down. So then we take this. Again, how do you add more to your position? It's like this. You have a type 1 decision level. This decision level is a good one because it broke out these guys right here. And then you get a retest of it and you get this. That's plenty right there. 80 pips, 80, 30, 40 pips is enough for a day. 100 pips, it's good. So that's a little bit of multi-time frame. I think the best way to go about multi-time frame is just exposing yourself more to the live charts during your free time. Backtesting is cool. Backtesting, like what we're doing right now, is nice. It gives us a way to practice decision levels and just looking at historical price action, the way I described OHLC and direction and breakout and closure. That's one good thing about using past history is the way is established closures of candles can give you indication. So like this, right? You have a breakout level here, and then you have source level here. Excuse me, breakout level here, source level here. What happened? Price broke out and tested your breakout level instead of here. So that's daily. You can design your weekly swing with your daily, right? That's that weekly level. Inside of the weekly, you have a couple daily levels to consider, right? Boom, daily. Then you see rejection, and then you take the SPY. And then all you would need to do is monitor and track price on the lower time frames, see if you have created decision levels that will take you to the upside. So we can see that daily rejected, H4 also rejected, H4 also created H4 decision level here, and H4 level was confirmed. If you miss this guy, you can get involved in this. And then when you bring in your trend line, you can see that they were both respected and you take this. You miss this trade, again, you repeat the same process. You've already confirmed your higher time frame direction, H4. You see that you have a type 1. You got the first confirmation rejection here, right? The second one, if you're bullish, price needs to open, low, high, low, close. And then at the same time, because it's H4, you have H4, H1, you have plenty of time to look for trend lines and find your confluences. I don't know if you guys use other indicators or anything like that, but it's not really needed. See, you have this decision level, it's rejected, and you have trend line, breakout trend line. So resistance turns support, support, and then you take the buy. And then again, you just look for price to create a decision to go up. After the rejection, it created a type 1. These are H4 candles buys, by the way, right? I encourage you to begin prioritizing H4 daily, weekly. H4 daily, weekly, H4 daily, weekly. Those are like that's like your playground. Weekly, you design your trend. Daily, you confirm your direction. H4, you flow with the market. M30, H1, M30, M15. We're going to talk about that in MTF2, MTF class 2, and how you can take it. It's kind of the same thing, but I want you guys, because a lot of you guys already have other knowledge of entries and stuff like that, but you're lacking your understanding of direction. H4 daily, weekly is what's going to give you that for you. Okay. I don't want to make this class too extended because I don't want to blow your attention span. So I'm actually going to stop this recording